welcome you to today's webinar. Today our discussion is on trend line and Fibonacci application. We have had webinars before this on this, but today we are going to look at the present situation and use Fibonacci application for determining important resistances and also for intraday trading. Okay, so we will straight away go to the chart because already we know about Fibonacci, but just to have a recap of this is that normally the Fibonacci ratios which are important are the 23.5% of the low to high or high to low. Then we have 38.2%. 50% is not a Fibonacci, but it's used sometimes 61.8, 76.5%, right? 38.6, sorry. Okay, so these are the important Fibonacci ratios which are used. So we will look at these ratios, and also we will look at the bigger ratios which comes 1:1, then 1:1.386, all those things. But now we will look at these figures and let us project the Fibonacci projected numbers for Nifty and Bank Nifty, and also use the trend line to see where all the intraday resistances supports come. So where all how you can trade even intraday or probably for position trading. Now we'll straight away go to the chart. We are using investing.com site for the chart application, and it's a free chart available. Now this is the Nifty chart. Now if you look at the Nifty chart, the last rally, I think the rally which is still happening, which has started somewhere from July middle and is now almost maturing into a 2 months rally. I think not much of a correction has happened at all in this particular rally. If at all there's a correction, just 1, 2, 3 days, and then it starts to rally. Now if you see the last 2 days, there has been some minor correction, and so let us use these particular levels. That is, what we are going to do is that for a smaller, for a closer levels, that is, in order to trade intraday or even position levels with some small gaps in between, we need to use the pivot bars which are just one pivot below, one pivot before the present day. Okay, so today is, let us say it is 17,303. The one pivot low which is before that is 17,055, and one pivot high is 17,436. So we have two numbers, one pivot high before the day, before today, that is 17,436, and one pivot low before that is the 17,055. So we will use this first for intraday, and then we will use the bigger ones also. So now we will go to the 17,436, so 17,055, right? Today if you look at it, it made a low of 17,303. Okay, 17,303. Today's low is 17,303. See, the Fibonacci can be applied in whichever manner that you want, from whichever high low position. So there is no hard and fast rule that it should be used only like this. So it is a comfort, okay, depending on which one you want to use it. Now the 17,436 and 17,055. If you look at this number, the difference in this is, so 17,436 minus 17,055, we will use this difference. This comes closer to 381 points. So approximately 380 points you can take. Now the from 380 points, if you look at it, what are the levels that we need to look for a projection, right? So 381 points now is the difference. Okay, so what is the ratios that normally we use? We use 23.5, then we use 38.6, 50%, 61.8% and all, right? So let's look at some of these ratios. So 381, so 381 into 0.235, okay, then 381 into 0.386, 381 into 0.9. So we'll stop with this. Sorry, 0.5, right? So 381 into 0.235, this is 89 points, right? So this is 89. This is 381 into 0.386. This is 147 or 150 points approximately, we can take it. Okay, and 381 into 0.5, this is 190 points. So this you can add to 17,055 or deduct this from 17,436. So let's use 17,436 that we have got and make these projections. Now 17,436, so minus 89, okay, for this. This is 17,436 minus 89. This comes to 17,347. 17,347 is the first support level that came. So once it starts to break, then probably it can come down a little bit. Then we use 150 points. 17,436 minus 150. This is 17,286 or 290 points, right? Then we have the 17,436 minus 190. Okay, 17,240 comes to 17,246. So let's look at where exactly what happened in the present situation. So for this, let's go to the probably the hourly chart. This is 17,303 is the low that has come today. So we'll this is the Nifty Futures. So Nifty, and so right. So this is 17,435. This is 7th and right. So we'll look at the Indian time. So it's not changing, unfortunately. Okay. Now today is 9th. Actually, it looked as if it stopped at 8th. So let's look at why. Okay, today it came to 17,303 and yesterday it went up to down to 17,277. So the low that we have seen is 17,277, and let's look at the what we got. See here, 17,286. That is the 0.386%, right? So very closer to that, plus or minus something can always come. So then it went up to 17,347. So what happened is, so this is an area of support. You know that the area of support is the 17,285, 86 levels, and so it came down up to 17,285, 286. Okay, and it started to take support at this and then rally. Now once it crosses, once it comes down to 17,286, okay, then if it again starts breaking above 17,347, then you trade it with 17,286 as a stop loss. Then you trade this with a 17,286 as a stop loss. So today, after it fell and started to rally, let us say it was 17,277 or so yesterday, and then it went up and closed closer to 17,360 or 370 levels, right, or 340, 350 levels. So once it started to go above this particular level, okay, then in that case you can trade above this with a stop loss below this, with a stop loss below. So the first trade that you could have gotten is above 17,347 with a stop loss of 17,286. Quite a simple thing. Now we can also use this in a different way. Okay, so as I told you, we can use Fibonacci in various ways. So let's look at the same Nifty 50. So we'll look at okay. Now we'll take ourselves to a bigger chart, okay, weekly chart. So the weekly chart, there has been very minor corrections. If you see, not much of a correction at all. So here it went up to 17,000 because now we have. So let's look at this. So we have only a correction which was a 15,915 to 15,632 or 15,513. I think it came down 15,505. I think this was the correction 15,895 to 15,505. Approximately a 400 points correction, or 380, 390 points is the correction which has happened in the last 2 months. So not much of a correction that could be seen. So we need to use some other thing for projection. That is probably we can use this one. This low is 13,596 and this is 15,531, 15,431. So 15,431 minus 13,596. So we will use this for bigger projection. Now this is 13,596, 15,431. So low was high, and low, let's say. 15,431, 13,596. So what is this difference? 15,431 minus 13,596. Minus 13. This is 1,835. Okay. So what is the other important low from where we can make a projection? So this is 14,151. All these figures we have even forgotten. To that extent the rally has been there. 15,151. So now if you make a projection, the first is 1:1, 1,835. 1:1 projection. So 14,000 plus 14,151. This was the 15,985 where there was a lot of resistance, right? So we saw a lot of resistance closer to the 15,900, 925 levels from where it dropped. Then 1,835 into, let us say, 1.618, because the rally has been there. So I'm just missing the 1.382. So if you do that, 1,835 into 1.386. So this is the next one, right? So 1,835 into 1.386, 2,543. So 2,543 if I add to 14,151. So 14,151 plus 2,543. This comes to 16,694 or 16,700. That is where we also saw some important resistance. From there was some pullback down, right? So then is the 1.618, 1835 into 1.618. So let's look at what this calculation is. This is 2,969. So 2,969 if we add to 14,151. $14,151 plus 1.618 of that is 2,969. So 14,151 plus 2,969 is 17,120. So even that is broken. So this is going to be a very important support if at all there is a fall, right? So now we need to get ourselves into more than that type of projection. So then we will have to use 2 times, then 2.386 times, all those things will come into play. So the market is just on fire, just going above all important levels. So now the next important level will be this. So into 2,834 into 2, this is 3,669 or 3,700. So 14,151 plus 3,700. So this is coming to 14,151 plus 3,700. This is the 17,850 levels. So that is where we are heading towards now. I think the present situation, which is around the 17,400, 500 mark. So it looks as if the next resistance now we are heading towards is 17,800, 850 levels. So this is the big projection right now. That is, if the 17,400, 450, which has been some resistance now, 440, 450 is going to be scaled, then probably we are heading towards a 17,850. So now how do we play this market? So let's look at 17. So the bigger numbers are far below. So the most important right now number will be, it should not break the 17,120 now. Okay, because it has gone above this, so it should not break below 17,120, and probably if we be heading towards the 17,850 marks. So this is the way you calculate the Fibonacci ratios and make some projection and keep a stop loss like this. That's a bigger investment type of stop loss. Now for the intraday trading, today you saw that I told you 17,345 it crossed. You just put a stop loss below 17,285, 86 levels, and then go ahead with the trade. There are also you can also now use within that. Now let's look at the 15-minute chart today. See what happens is, this is 17,436, right? So 17,431, and this is the low which we know is a 17,256, 17,256, and 17,431. So we have the so 17,431, 17,256. Right, this is on the spot. This is on the spot. So 17,431, 17,256. Minus 17,256. This is 175 rupees. This is 175 rupees, right? So now this 175, let's say into 0.235 is how much? 175 into 0.235. It is 41 rupees. So once it came up to 17,256 plus 41, you add 17,297. So the moment it crossed the 17,297, you can look as if you can go long, keeping 17,256 as a stop loss. Now what are the other projections that you can have based on 175? 175 into 0.386. 175, normally 0.5 is not used, but we will use that. So 175 into 0.5 also, and 175 into 0.765. All these things we add to the 17,256. Okay, so 175 into 0.386 is 67. So plus 67 is plus 67, 17,323. 17,323. I told you the first resistance was 17,297 or so. So second was 17,323. Then next was 175 into 0.5 is 87.5. So this you add to 17,256 plus 87. Okay. This is 17,343. So this is another resistance. Then 0.618. This comes to 108. 108 plus 17,256. 17,364. Then 0.765. This is 133. So that comes to 17,389. So today we have not seen 17,389. So these things can be used for by you for trading. So what you can do is that if the market has crossed 17,364, then probably you can use the next level of 17,343 as a stop loss if you have gone long about this. Suppose if the market had come down initially to 17,303 or so, so this is 17,297, And in the bigger picture, we have seen that once it crossed the 17,286, 287 levels, okay, because we saw this difference. Now let me again go back to this difference. See, I think, so this is the one, 17,000, this is the 17,055, and to remind you, 17,055 and 17,431. So this was 17,431 minus 17,055 minus 17,055. This is 376, 377 rupees. So that into 0.235 we have said already is around 88 rupees. Right? Is around 88 rupees. So the 88 rupees is the first difference from 17,431. So 17,431 minus 88. That was 17,343. And here also we have seen 17,343. So 17,343 was one important levels. Then we have seen 371 into 0.386, which is 143 rupees. So 17,431 minus 143. 17,287. So 17,287 is another important. So the moment it came down below that and started to rally above 17,288, then the next important was the 0.5%, which we saw about is 185 points or so. So that is 17,431 minus 185, 186 or 187. That was 17,245, 250 level. So it came down closer to 17,255 and now started to rally. So once it crossed 17,342, 343, then the next level becomes 17,287, 88. So with that, we could have kept as a stop loss 17,287, 288 as a stop loss and trade the market on the upside. Okay, and trade the market on the upside. So now it's going to go now above 17,343. It's trading. So there's a chance that probably it could be heading towards a higher side. Now let us look at the as I told you, there is no hard and fast rule for using Fibonacci. So what you can, there are alternate mechanisms which also we will tell you. So this was 377 points from 17,055, right? So that you can add the 355 into 0.235, 0.386. You can add to this bottom also and see what you can get. So the same thing like 377 into 0.235 plus 17,255. That was 17,343 or so. So it's like the moment it starts to rally above that particular place of 17,343 or so, you can be dead confident that probably you will be heading towards a higher side. So what is the 377 into 0.386? Now we put it on the reverse side, the same place. So once I defined this, we got into 0.386 is the that is 175 into 0.618. 108. So we are getting the same 17,263, all those things. So now very clear that the path is on the upside because it cleared one of the important Fibonacci resistance support, and so as long as it doesn't fall below 17,285.87 immediately, then we can keep that as a stop loss and head it towards the higher side. Now if it is going to go on the higher side, then the first resistance of course 17,431, right? So above that, what are the levels that will come? What are the levels that will come? That we will see right now. See, getting this. So we have 377 into 0.235. Okay, so this is what we saw as something like 89 points, right? So on the upside, when it starts to rally, 17,431 or 432 plus 89. Okay, 17,432 plus 810, that becomes 17,532 minus 11. So 17,520. So the first resistance, if it breaks 17,432, will come closer to 17,520. Similarly, the next is the 145, 150 points which we saw. So 17,432 plus that 145 points or so. So 17,577. So you can use all these things for trading. Now, the 370 points which we have, 377 points which we have, that into 0.235, that into 0.386, that into this one. So I think probably you can use that same figure for on the upside, whatever that you want. So because there was a gap of 377, so 377 into 0.235, 377 into 0.382, you can use that also for your calculation purposes. So you can make a projection that above 17,432, you will have 17,520, you will have 17,577, then you will have 170, 180 points, which could be 17,602 or so. So you will have closer knit. That is the reason what I'm saying is 17,000. If it crosses 432, you can buy. Keeping what is the next level point? We saw 17,389 or so, 389 or 390 as this one. So the moment it starts to go above 17,432, you can buy this, keeping this particular thing as a stop loss. You can keep this and buy this as a stop loss. So some 5-6 points you always keep, or probably you can keep a slightly lower figure than 17,389 as a stop loss, because sometimes it just comes 5, 7, 8, 9 points down and then just goes off. So this will be the trading point. That right now what you should do is that you should keep 17,285 or 87 as a stop loss and trade on the upside. Now the first thing, if it starts to move above 17,389 levels, then you'll have just keep 1-2 levels below 17,364. Don't keep it. 17,430 or so, 340 or so as a stop loss. Then once it crosses 17,432, probably you can keep 17,389 or 342 or 343 as a stop loss. So probably what we normally see generally in this market, in Nifty as far as possible, there is a general thing of around 85, 89 points, below which probably the market comes a little down. Probably it comes down back to slightly double that figure or so it comes down. So 88, 89 points is probably, it keeps some sort of a mini trend change. Some sort of a mini trend change happens in Nifty of around 88, 89 points. Okay, I don't know why exactly the 89 points, but approximately the 89 points gives some sort of a trend change in Nifty. So you can keep that in mind. At the same time, I've also told you earlier also, there is a trend factor which you can apply, 5.5%, 8.9%, 11.5%. So this is how generally the market, it keeps moving. So now if you see that 17,256 as an important area, if this is going to be an important low, then we can keep 1.028. That comes to 17,750, and we have projected 17,850 before. So I think the next important resistance is going to come between 17,750 to 17,850. I think that's probably an area where probably we could see some sort of a resistance coming. So it's still on the long side, but the market is at dizzying height, so we need to be careful about it. So whatever we saw right now, we can see in Bank Nifty also, and there also we will use a trend line to showcase how you can use it. So we go to the Bank Nifty. Bank Nifty, of course, generally a little more confusing compared to this one, but it looks as if we are going to see a trend on the upside, but very much confusing trend wise. It keeps going up and down. So this is a 15-minute chart, much more confusing. So we'll go to the daily chart. So this is Bank Nifty for you, and now yesterday it broke this particular low, right? So this is hourly chart. Sorry, this is daily chart. So it broke the 36,685, which means that 36,151 is going to be a very important stop loss. Okay, it's going to be an important stop loss. And if you see, this is a move which is in Fibonacci terms. Let's look at the so we are going to draw the Fibonacci from right. So approximately, if you see, the first support came down, should have been 36,000. I don't know what is missing in this chart. See, 36,000. Let's look at the hourly chart. I don't know what is okay. Now it's clear. So more clear. Now, see this the chart which is now we are drawn from. I'll just remove this. So now we have visibility now. So 36,264 is the 0.382%. So normally, it just has some sort of fall, which is slightly greater than 38.6. So normally it should not happen, but it should hold on to that. But if you look at it on an hourly chart also, it just came down a little bit, and from there it started to bounce back. So this is the 36,264 is a very important thing. Then after this, 36,570 or 580. So that's why if you see today also, it after going up, today it just took support closer to 36,580. If you look at the chart, this is the hourly chart, right? So this is on 8th, 36,510, 520, it came down. And today and all, it just took support closer to 36,570, 580 levels. So this is an area where it just started to take support, which is the 36,586, 587 levels. And if you see, this low is also 570, right? So this low is also 570. So 570 level low has not been taken off. So this is 580, 570, 580 levels. So this is a very important piece of information for you, because now if it starts to move down, then it should not move below this. So if it starts to move below this 36,570, 580, probably we can see some sort of a slightly deeper pullback. The reason we are saying this is, see, that means it would have formed a lower top. Suppose, because if you look at the daily chart, now it should not. Now this is a daily chart, right? So if it starts moving below today's low, if it starts moving below today's low, which is 36,570, then what probably could happen is it will give an impression that it is forming a lower top, lower bottom. Lower top, lower bottom case will come, or a lower top is at least will be in place. So in order to avoid this, we should see the Bank Nifty try to hold above the 36,570 levels. So what is very important is the 36,570 levels should hold. Okay. Now we will also look at the suppose if you get this one, that this low is going to be important low, that is 36,150 is going to be an important low. So what we will do is that now for trading on the so this is the low. Okay. Now this is the recent high. So we will draw the Fibonacci for this. Okay. So the low is 36,155. So from 36,155 to this high, which is 36,843, 850 levels, right? Okay. Okay. So I will just read it out for you because the visibility is a little poor. So we have 36,682 as the first level for this 23.5. From the bottom of 36,155 to 36,850. Once it started to cut this particular thing, probably you can say, no, you can go short below this with a stop loss above this. Then after that came the next important level, which is this, right? Which is this, see, just holding on. So this is the 38.6% retracement. It just held on to this particular level, okay? So this is the level which is 36,575.80 levels. And after that it would have gone to 36,503, then 36,420. So 36,420 is a very important level. So it just held on to this important level, and now you can see this particular level is there. So the moment it starts trading above this particular high, if you want, you can keep this low as a stop loss. You can keep this low as a stop loss. So if it is going to go above this 36,840, 850, 860, then you can trade this keeping 36,670 or 680 as a stop loss. If it starts to move about 36,840, 850 levels, then you can keep 36,680 as a stop loss, which is only 150 points. But generally, 150, 200 points is in Bank Nifty can be easily a stop loss. 100 points to 150 points can become easily a stop loss. So in order to keep the market at a very close this one, we have kept the Fibonacci from 36,155 to 36,852, which is a 700 points, right? So it is a 700 points. So from 700 points, you look at what are the calculations that you get. So you have into 0.5 becomes 350, approximately 350 points. So 350 points mean that comes closer to 36,500. 36,500. So 38.6% comes a little on the higher side, which is the 36,575.80 levels. So it has held on to this 36,575.80. So it can come down right up to 36,420. So only below 36,420 we are going to be concerned that probably what rally that started to take place from now probably can get aborted. So we need to be careful at which is about 36,420. Now we will use the trend line. Okay. So what we will do is that we will now, okay, so this trend line is the most important trend line right now. So let's look at where it comes. Now it is at this level. So if it starts to fall, yeah, see 36,420. So 36,420 I think is going to be a most important line. So we have projected using the this one, that is the trend line as well as the Fibonacci, that 36,420 looks to be the most important level of support right now if Bank Nifty is to hold. Otherwise probably we could see more amount of consolidation where probably it can fall a little more. So all those things can take place. So right now I think then otherwise then it may fall even below this, and probably we could even look at levels of 35,373.80 levels also possibly. So we expect that if this is to hold, then probably this has to break, and if this breaks, then probably we will be heading towards much higher levels. So when we draw a Fibonacci for this level also, let us say hourly chart. So from this level to this level. So this is the 36,913, 36,750, 36,636 and 36,522 and 36,380. So once when we draw from this level, the moment it started to break 36,380, then in that case you could have looked towards on the long side and probably used all these levels for trading purposes. That is 36,750. It went above 36. It didn't go above 36,750, right? So it went up to 36,636. So since it passed about 36,636, suggests that you should probably keep 36,380 as a stop loss, because if one level is broken, do not keep that next level, keep one level below that as a place for stop loss. So if that be the case, then 36,630, once it was broken, we should have kept 36,380 as a stop loss. Now since 36,750 has been broken, we could have kept 36,522. This is the place, right? This is a place where probably you can keep this as a stop loss. Okay, so now it does not, if it goes above 36,913, then we can keep 36,635, this particular place as a stop loss. So this way you can look towards trading. That is, if one level of Fibonacci is traded, second level, that is what I'm saying is, if now 36,380 is at 23.5%, if 36,522 is taken off, then we can keep 36,150 as a stop loss. If 36,636 is taken off, then we can keep 36,380 as a stop loss. If 36,750 is taken off, then keep 36,520 or something like that as a stop loss. So you can trade based on this. Suppose, okay, now you have a problem that even this much of gap is not possible. Then today, after that, when it starts to drop from some higher level, then you should look towards redraw the Fibonacci from that levels. For example, now from here to this, okay, from this place to this place, okay. So now today from here to this, so the moment it drops below 36,686, okay, then you keep or 36,000. See, this was the 36,570, 580 levels. So it came up to this, right? So once it started to drop below this, then you should have kept this high as a stop loss. Or if it drops below this level also, you can keep this high as a stop loss. So then, in this case, you are getting a much narrower place. See, for example, we have got 36,498. It didn't come up to 498. It only came up to this level. So even it did not break the 38.2% retracement any substantially, because it came down to 580, 570. So it's 580 or so which were projected. So 570, 580 points is where probably it has just come. So it has to break a 38.6% retracement for us to confirm that probably the rally which went up to this place is over. It did not happen. It did not happen. But nevertheless, there was a 23.5 thing, which was 36,686. So if you wanted, you should have sold 36,686 and probably put in a stop loss about 36,854. And when it came closer to 36,582, you could have taken profit. Then once it started from 582, it started to go up above the 36,685 or so. Then probably you could have gone long in the market, keeping this particular low as a stop loss, So this is how you use the Fibonacci ratios for trading. So now we can use this and see in one or two more assets before we wind up for the day. So probably we will look at say let's look at Reliance Industries. Reliance has had a breakneck rally right now. So I think if you go with the daily chart also, you will find it very difficult to get even a 23.5% retracement. So let's look at where probably the first area of support can come for Reliance. So 2368. So I think the 2479 to 2368. So it has to fall below 2368 before we take a call that probably Reliance has topped out at 2479. But even then, normally a lot of them consider 2300 as a very important. So 38.6% is 2300. So unless it drops below 2300, generally it is considered to be bullish. But 23.6, since it has rallied very heavily, then 2368 could be still considered. So now we cannot, we find it very difficult to use a bigger time frame because of the huge rally that has taken place. So we need to look at whether any smaller time frame gives us any opportunity to look at it. Very difficult to do anything about Reliance. So I think at this point of time, I think there is no point in looking at Reliance for Fibonacci type of trade. So ICICI, we'll look at ICICI. So this is a daily chart, and so we can so it has come and taken support exactly at 38.2%, right? So it has come at 710. So 38.2%, 38.382, sorry, is now at 710. So only if it starts to break below that, then we may probably see further downward chance, which could probably take right up to 696. So I don't think so. It's the maximum fall probably could be towards the 702, 703 levels, which is the next percentage level. So right now it looks as if we should look at 0.618 of this move. So now what we should do is we go to the hourly chart. So in the hourly chart we draw a Fibonacci. Okay. So the moment it rallied above 720, then we could have said that probably this is a stop loss. So above if it starts to rally above 720, because then if it is above 38.2% retracement, then we can consider this as a stop loss. If it has only moved above 723 very substantially, then we can keep this as a stop loss. So now it has happened. It has come like this. So I think now this is a stop loss. But once it started up to this level, we could have used this as a stop loss. We could have used this as a probably as a stop loss. So very effectively right now we have ICICI, where probably it looks as if some support has taken place. So once it went up to the higher level, today you could have bought at some level, keeping the moment it was above 38.2%, of this move from the top to the correction. Then you could have looked towards going long on any dip, by keeping this the low which happened yesterday as a stop loss for intraday trading. Now let's look at gold, international gold. So gold probably still could not clear this very important resistance of 1833, which we said is a very important resistance. So that has not been cleared yet. This is a very important monthly charts and other things. So it has not yet cleared this. So it is still working itself on in that. So we look at the Fibonacci for this. So 38.2% retracement is 1776. So this is going to be a very important area for a trend change as far as gold is concerned. So if it starts to get itself below 1776, then probably we could be heading towards a slightly much lower level, towards 1741 or respectively or so. So right now it's something which probably we need to look towards monitoring the position. If it starts to bounce back from this particular level, 1776 or so, or probably at around this level itself, because now if you draw I would say a trend line based on this, that seems to be. So So this is going to be a very important level. So probably it can have some dip if not to reach around 1774, 1776. So this is the important trend line that probably we expect to hold. So 1774, 1775 is expected to be a very important support, below which probably we could expect much lower level to come. We can look towards probably on any rally, since it has also broken important low, which is this particular low. I think it has broken this particular low, which is 1801. So any rally probably will be met with a 61.8% retracement from the top, which is right now around 1834. So 1834 to 1774 is around 60 points. So 60 point into 0.386 could be around 0.382 is around 20. So probably we can expect, if at all there is a rally, we could expect some resistance to come closer to 1810, 1814, 15 levels. And then we have to see how the market works. So if it is from 1774, then there could be a chance that it could rally from 1774 to 1810 or 1814, and then a complete trend change has to take place around that place before it knocks off above 1832. Otherwise, since it has come below 38.2% right now, there's a chance that probably we could be looking towards support here. But if it cracks below that, then probably we have to assume that the rally towards 1832 is finished, and probably we will be heading towards a slightly lower level. And for that also, the most important thing that we need to look at it is the trend line. So right now we saw this as the most flattish trend line, right? So this is the flattish trend line, and if you look at this particular thing, and then if you project it, see here also it just held on to this level. So now what we have to presume, this since it is over here, we are expecting that probably it could be probably we could see much lower levels. We could probably see much lower levels because it has broken this particular level. See, if you see, this level has been broken. So since this level has been broken, I think any this one probably we could be expecting some resistance on pullback to this trend line. We could be expecting some resistance around this level, which is the 18, which I told you is 1807, 1808. So it has to cross above this before it starts to sustain its uptrend. So right now this level has been broken, and so using the trend line, I think probably we can also see so many times this particular level is held. See, this day, this day, this day, this day. So many days. So yesterday also it just took support here and then went up and then came down. So this is going to be a very interesting thing, and let's see what happens as far as the this one is concerned. So now so this is as far as gold is concerned, and so we will probably look at crude, WTI crude. Crude oil futures, now it is at 69.25. So let's look at the Fibonacci numbers for the big numbers. So once it rallied above 67.49, I think this particular level, now when it drops down, it is taking support at that level. When it drops down, because it didn't go up to this level, that is the 61.8%. Now it went up to the 69.28. So I think probably we should keep this particular level as because it has broken 67.49 and it even broke the 69.28 levels, which means that either we can keep this low. Yes, this low is an important place, 67.49, but more than that, I think this low is going to be very important, 65.25. So as long as it's able to hold above 65.25, there is a chance that probably it can dip, it can again go back. Now it has to cross 71.07 before we can keep 67.45 or 4.9 as a stop loss, because we are just keeping one level below that as a place where we want to keep our stop loss positions. So this is as far as W2 accrued is concerned. So you can use these type of concepts, both Fibonacci and trend line, in any other type of assets also. Okay, thank you very much. So you can ask your questions now. So thank you very much. So this all comes, Fibonacci trend line all comes with some amount of practice. So I suggest that no, you can use your higher tops, higher bottoms, do concept, and then the trend line and the Fibonacci to make some projections for both for intraday as well as for position trading. So thank you very much. So we'll look towards again next webinar next week. Stay safe. Thank you.